Forecasting cash flow is an important and often overlooked tool that many small businesses don't use. For most small businesses, forecasting cash flow is simply attempting to predict what your checkbook will look like over the coming months. If you're going to run out of cash, it's better to figure it out a few months ahead of time and deal with it, rather than discover a week ahead of time that you don't have enough cash to pay your obligations. In this video, we're going to look at a cash flow exercise we use in the Successful Entrepreneur program at Independence Community College and walk through the steps of cash planning using a scenario of a tool and jig company called Tool Shop Solutions. You can download the scenario as well as the spreadsheet file used in the scenario at the web address shown on the screen. There's also a link to a blank template file that you can use for your own cash flow planning. In the scenario, Tim Taylor, owner of Tool Shop Solutions, has entered some of the data in his cash flow projection spreadsheet. He's missing some entries for March and April, so the negative projected balance of a minus $29,430 as of the end of April is not accurate. The remaining entries Tim needs to make are spelled out in 4 steps on the Tool Shop Solutions Cash Flow Report Exercise Sheet. Again, this is the web address that you can use to download the worksheets that we're going to show in the video and also the free blank template for your own use. The remaining video will show these entries being inserted into the worksheet and the resulting new positive cash balances. If you have any questions, feel free to call or email Jim Correll of the Successful Entrepreneur program at Independence Community College in Independence, Kansas. This is the spreadsheet that Tim Taylor of Tool Shop Solutions has started in his cash flow planning for the new year. He's gotten some of the entries made, but still missing some for March and April. He has a line of credit with his bank, and he can borrow up to $15,000 from 1 to 3 times throughout the year. The next entries will be the ones that come from step 1 in the example sheet. He needs to enter his cash sale projections for March and April of $16,567 for March and $20,864 for April. He has advertising for $500 and $900 for those 2 months. He has license and fees of $1,000 in April. He has meals and entertainment of $700 in March. Professional fees and property taxes of $750 and $2750 respectively. Travel, he's going to take a trip in March for $1,000, and he's got an estimated income tax payment that he's going to make in March of $3,000. Now, as you can see, his ending cash balance now at the end of April is a minus $25.99, but he still has some more entries to make. These come from step 2. As the warmer weather of spring comes, the electric bill will be a little bit higher as air conditioners are used more. So for utilities, he's going to enter $650 and $750 for March and April respectively. So there's the utilities line, $650 and $750. The vehicle he uses is going to need some repair work done in March. The estimate that he got from the repair place is $500. So I'm going to put that under vehicle, $500. Oh, actually we need to enter $625 because the normal vehicle expenses are $125. So instead of just the $500, we're going to enter $625 to account for the $125 that he thinks will be normal in that month. And then in April, he's predicting that he's going to have $135 in vehicle expense. He wants to take some extra money in April to go on vacation, so we're going to put $500 in owner's draw for March, and then $1,000 to make that an extra $500 in April. So we go down here to owner's draw, put in the normal $500 that he takes out, and then a little bit extra in April. He gets to thinking about the estimated tax payment in March, and it doesn't look right to him, so he thinks it might not be due till April, so he gets his paperwork, tax return out from the IRS, and sure enough, the estimated payment is not due until April. So we're going to move the estimated tax payment of $3,000 from March to April instead. Now, seeing that he'll have a negative cash balance of a minus $62.59 for the month of April, Tim decides to plan to take an $8,000 loan advance from the bank in April. And that goes up here in this loan, on this loan received line. So if he's going to take an $8,000 advance in April, he plugs that in there, and that brings his cash balance at the end of April to $1,741. Remember that in cash flow planning, you're trying to predict what your checkbook will look like over the coming months. You have to include all sources of incoming and outgoing cash, regardless of whether or not the transactions are classified as income or expenses. Incoming cash includes not only income from cash sales, but also things like collections from accounts receivable, equity funds received from your personal accounts or other investors, loan proceeds, insurance settlements, and tax refunds. Outgoing cash includes not only cash expenses, but also things like payments to vendors on account, inventory expenditures, estimated tax payments, loan payments, both principal and interest, and owner's withdrawal. Cash flow planning works best if after the end of each month you retrieve your ongoing cash flow projection spreadsheet and update the column for the month just ended with actual figures from your check register. While you're at it, take a look at future months to see if the estimates need to be adjusted. This cash flow planning process can help you see when you may have extra cash or you may come up short of cash, to give you a tool to manage your cash flow rather than your cash flow managing you. The Successful Entrepreneur Program at Independence Community College in Independence, Kansas provides practical, entrepreneurial, and small business curriculum and training to area business owners and aspiring entrepreneurs. The college works in conjunction with the not-for-profit 501c3 Innovative Business Resource Center to provide mentoring and incubation services to new business owners and to existing business owners reinventing their businesses. For information about the Successful Entrepreneur Program, contact Facilitator Business Coach Jim Correll at 620-232-5470 or jcorrell@ndcc.edu. For information or questions about the Innovative Business Resource Center and related incubation and mentoring services, please visit www.ibrcenter.org.